Hello everyone. We are excited to share with you today a strategy video that we have prepared on our YouTube channel. Utilizing the average true range and 200 parameter EMA indicators, this strategy has produced impressive gains, and we can't wait to share it with you. But first, we'd like to make a point. This strategy may only be suitable for those interested in technical analysis. If you are not familiar with technical analysis, this video may not be for you. However, if you have some knowledge of technical analysis, we believe this strategy will be of great interest to you. In this strategy video, we will provide step-by-step guidance on how to use the average true range and 200 parameter EMA indicators. We will also present a real-life example of the strategy, so you can fully understand how to apply it. We highly recommend that you watch this video in its entirety, as we will cover all the details of the strategy and show you some surprising results. Now, let's get started. The average true range ATR indicator is a measure of market volatility that reflects the degree of price movement in a particular market. It is often used in conjunction with other technical indicators, such as moving averages, to identify potential buy and sell signals. The chart we will be working on today is the 1-hour time frame of the JAWS pair. I have drawn the ATR indicator with 5 parameters horizontally using the default settings, because I have noticed that there is a significant increase in trading volume when the pair goes above this value, and a weakening of price movements when it goes below this value. You may be wondering, is this value different for every pair? The high volume buying, selling value given by the ATR indicator varies for each pair and each time frame, but it is quite easy to determine. Simply place the indicator line below your chart and observe the price movements above it. Roughly determine which ATR value the price is starting to show less reaction to, and where the candlestick's bodies are getting smaller, and draw a horizontal line on that ATR value. There is no exact rule for this value. You can determine a level at which the price becomes unresponsive to the maximum. Let's take an example of a long position. The price must be above the 200 EMA line and the ATR line must go above the 5.0 value that we have determined. This suggests an increase in buying pressure in the market, and a suitable entry point would be a bullish engulfing or pin bar closing. As you can see here, both the ATR line went above the 5.0 parameter and the price showed an upward reaction, with 2 high-volume bullish candlesticks. In addition, extending Fibonacci ratios from a clear bottom level to a clear top level will be important for identifying important areas for our trading success. And now, let's set our 1 to 1.5 risk-reward ratio for the long position, and see which ratio it corresponds to on the Fibonacci. Great! Our 1 to 1.5 level corresponds to the 2.618 Fibonacci ratio. This level is an important correction zone. Our trade success. Let's take a look at another example of a long position, and this time let's enter with a resistance line for additional confirmation. Let's draw Fibonacci from a clear bottom and top point, while the price is still moving with low volume below the ATR band. At this point, although the ATR line has crossed above our designated 5.0 parameter, the large red engulf candle on the chart indicates that we need to be a bit more patient. Before entering the trade, please pay attention. Successful professional traders always notice these kinds of small details and make their trades accordingly, although not necessarily in a single trade. They consistently make more profits than losses in their short, medium, and long-term investments, thus increasing their capital. Relying solely on indicator signals is never enough for success. Therefore, Please try to watch the videos from beginning to end without skipping any part. I strive to explain the ways of successful trading in the shortest and most effective way possible without keeping you in front of the screen for too long. And I kindly ask you to subscribe and hit the like button. Thank you. Let's continue where we left off. We are still waiting for a suitable formation to enter the trade and to increase our success rate. We draw a resistance line from the top point towards the right. We will enter the trade when both ATR crosses above 5 and the price closes above the resistance line. Yes, all the conditions we wanted have been met. We are entering the trade. And now, let's look at examples by waiting for the same conditions to be met. Let's take a look at one more example and wrap up our video. I'm sure you're familiar with the entire strategy. Please watch this example carefully, as I will show you a small but important detail. Please pay attention. Here, we have two large bearish candlesticks, but the ATR indicator has not yet confirmed the volume of this decline. We are staying true to the rule and waiting. Yes, the conditions have been met one bar later. We can enter the trade. Patience is the key to success.